Hey everyone, it's Zach Beck. Homeownership has long been viewed as the epitome of the American dream. Now, whether or not homeownership is right for you, you might be considering it right now due to the historically low interest rates we are seeing that have been imposed by the Federal Reserve. And those interest rates are going to remain with us probably all the way to 2023 or 2024. So what I want to do in this video is share 7 home buying mistakes that you should avoid if you're considering making this large financial decision. So let's take our time, dive into the details, and check it out right now. Let's jump into it. The first mistake you want to avoid if you're considering purchasing a home is not getting pre-approved first. Now, getting a pre-approval letter is one of the most important things that you need to do because it's the thing that real estate agents and sellers are going to look for to understand what your actual budget is. Now, I believe it's very important to understand that a pre-approval letter is different than a pre-qualification letter. Pre-qualification means you actually go through the mechanism to actually qualify for a specific loan. But if you're pre-approved, it shows that you can actually receive approval for a loan up to a certain amount. So basically it's your foot in the door. If you don't have a pre-approval letter when you go in to look at a home, you're not going to be on the high list when a selection is going to be made from a seller and a buyer. So my encouragement is that you go ahead and get pre-approved first before you even consider going out and trying to purchase a home. The second mistake that you want to avoid when you're considering purchasing a home is visiting homes that are too expensive. Now, I know it's fun to go window shopping, it's fun to see interesting things, but when you're actually trying to wrap your head around what type of investment you're about to make, if you go in and actually look at things that are too expensive or out of your budget, you might actually be tempted to try and reach higher than you actually should, which could have devastating impacts on your long-term financial objectives. So if you actually go out and try and check out things that are not in your budget or even in the realm of reality for yourself, it's really setting up actually a disappointment in the future. And to that extent, you don't want to get your hopes too high, considering that you want to make sure that if you're purchasing a home, that the monthly mortgage payment is not anywhere more than between 25% and 30% of your monthly income. So from that perspective, I believe it's important for you to go and actually look at places that are hopefully just at your budget or below your budget. Don't go and look at homes that are above your budget. To that extent, if you're hung up on looking at homes that are above your budget, perhaps now is not the time for you to consider purchasing a home. Maybe you actually want to shoot higher, but you might need to take more time to save and invest and actually have the money necessary to reach that goal. So really think about it, not just because interest rates are low right now, that doesn't necessarily mean you should purchase a home right now. It needs to be the right home at the right place at the right time for your life, because you don't want to be pressured into making a decision just because of what's happening economically. You really need to make the best decision that's going to help you and your family in living out your dreams and achieving your goals. A third mistake to avoid is not comparing lenders. Now, anytime you shop, whether you're on Amazon or whether you're at the store, you generally compare prices between what you're going to purchase a product for. So why wouldn't you do the same thing when you're going to actually get a loan for one of the largest transactions in your life? So my encouragement is to take your time. You might go to a home and then that person, if you're going to like a new development, might say, well, they have a preferred lender. That's fine. You have to go through that route, try and see what they can offer you, but take your time and actually shop around, because not all lenders are created equal. And my encouragement is to take your time, do your due diligence, and try and get the best deal possible. Because if you're going to go ahead and actually make the most of the low interest rates we're encountering right now, you don't want to lose out on those low interest rates because you go with a bad lender who's going to nickel and dime you and put in all sorts of transaction fees that prevents you from actually being able to achieve some of the benefits of this current market we're encountering. So take your time, shop around, don't ever feel pressured. This is probably going to be the largest transaction in your life. Therefore, you want to make sure you do your due diligence, take your time, take a deep breath, and then make the best decision possible and have all of the information laid out so that way you can do so. To that extent, you might find pressure to actually make a decision quickly because you might have competing offers, you might be in love with the house, there's going to be all sorts of variables going on in the moment. So if you get pre-qualified and then you actually come to an agreement with a preferred lender, you might want to go that direction. My encouragement, once again, take your time. Take a deep breath. It's going to be okay. If you don't get that home, it's going to be all right. There's going to always be another place for you to look at. But take your time and compare lenders so that way you can get the best bang for the buck. The fourth mistake you want to avoid when you're considering purchasing a home is not checking your credit first. Now, having a credit score that is in the excellent category is ideal. That's what you're striving for. But if you don't even know what your credit score is, you should not be shopping for a home. You really need to understand what it is and where it needs to be in order for you to get the best deal possible. Because if you have bad credit, it's going to impact you dramatically when it comes to what kind of interest rate you're going to receive on your mortgage. So you want to really do your due diligence, not just to understand what your credit score is right now, but where you need to get it to and what work needs to be done to get there. And from that standpoint, you want to make sure that you're limiting debt, that you're doing everything you can to cut costs in other areas of your life, that you're making wise financial decisions so that way you don't come into purchasing a mortgage with a mountain of debt already, because you're going to find that most lenders are going to look at your debt to income ratio. And if you have too much debt right now, that not only is going to impact your credit score, it's going to impact the willingness of that lender to actually provide you with those finances. On that note, there are plenty of places that you can find your credit score, whether that is Mint, Credit Karma, you can do other things like NerdWallet, there's all sorts of options out there, but just try and understand where it is. And then what my encouragement is that find out where you are right now and then do everything you can to get into the excellent category. You at least want to be over 700. You will preferably want to be over 720, get to 750, go for 800. And I'm saying this as someone who is not a big debt person. I actually encourage most people to avoid debt, to avoid credit cards. I know that is maybe contrary to popular opinion or belief in this current economic climate. I just view that from more a philosophical perspective as to what is best for your life. But I do think that a mortgage is one of those things that you're probably going to actually view as acceptable debt because it's providing you with the overall structure and stability of your life. Now, I'm not going to get into the details of whether you want to get a 15-year or a 30-year mortgage. That is up to you, and we can dive into that in a different video. My encouragement, though, is that do everything you can to have a credit score that is going to provide you with the ability to get the best rates possible, so that way not only are you able to get the home that you want, but that way you have extra capital available on a monthly basis to still live out your life and achieve your dreams. And on that note, like I said previously, the fifth thing you want to avoid when it comes to purchasing a home is carrying around too much debt. You don't want to be burdened by it. You don't want to have too much, because once again, they are going to look at your debt to income ratio. And if that is out of proportion or out of whack, you're not going to get a good rate, and it's not likely that this is a good time for you to purchase a home. I remember when I was considering purchasing my second home, I had too much debt to do so. So I realized that I needed to take a step back, make changes in my life to actually get in a better financial foothold. So when that time comes for me to actually make another purchase, I could do so in the best position possible. The sixth mistake that you want to avoid when it comes to purchasing a home is not missing the chance to rate shop. And what I mean by that is previously I talked about actually looking at different lenders, considering their variables and what would be best for you. In the same way, you want to make sure you shop around for different rates. There's all sorts of options out there. There's a myriad of possibilities. So you want to make sure that you get the best rate possible for the best mortgage possible. Like I previously mentioned, you might consider a 15-year or a 30-year mortgage, but that is really up to you and what you actually want to achieve. If you can make a 15-year mortgage happen, by all means go for it. But with a 30-year mortgage and the low interest rates right now, that's not necessarily out of question when you consider inflation over the long term. But ultimately, a lot of people would advise a 15-year as a better alternative. But irrespective of those two options, my encouragement is that if you actually do your due diligence and shop around for a different rate, it will position yourself once again to make the best decision possible to help you achieve your financial goals. Now, the seventh and last thing that you want to avoid when it comes to purchasing a home is saving all of your cash for a down payment. Now, what I mean by this is that you don't want to position yourself where you are called house poor, meaning let's say you save up $100,000 to put as a down payment on your home, and then you use all of that money as your 20% down payment, then you have no cash left over for closing costs, for upgrades, for anything to that extent. So realize when you're budgeting for a home that you don't just want to view all the money that you've saved as all the money for your down payment. Now, I still strongly recommend that you do a 20% down payment minimum, so that way you don't have to get mortgage insurance, but then you have to look at what is that 20% actually going to be. That doesn't mean that all the money you've saved in cash is actually going to be the amount that you should put as your down payment. Maybe you should put 75% of the amount that you've saved and leave that 25% for closing costs, for upgrades to your home, for other things, but also for other areas of life. And it might help you reevaluate overall just how much you're looking to spend when it comes to purchasing a home. Like I said, it's easy to watch things on TV, see pictures online, look at Instagram, realize all these beautiful homes that exist out there, but those might not be realistic for you right now. I still want you to be able to achieve your goals and actually pursue what you're looking to do in your life, but you want to be realistic at the same time. So make sure that you don't take all of your money and then place it into a home that then is not going to be liquid. It's not going to provide you with really anything else other than the home itself, which once again, like I said, is a great treasure and a great blessing in your life, but ultimately it could also cause you to be house poor. So take your time, take a deep breath, reassess your finances, take your time to understand your budget, and make sure that you don't put yourself in a situation where you have a home but you have no money. With all that being said, I'd like to thank you for watching the video today. If you wouldn't mind, please like the video. That would really help the channel out for the YouTube algorithm, help push this video to other people who might need to hear it. Because you might have a friend or a family member who's strongly considering purchasing a home right now due to these low interest rates, but making sure that they have the best information possible to make a wise decision so that way they can still achieve their goals. In addition, if you have any questions, please comment down below. I'd love to interact with you, get to know you, do everything I can to interact, and do everything I can to help you make a wise decision. So I'll do any research for you, try and help you the best way I possibly can. In addition, if you wouldn't mind, please subscribe to the channel. That would mean a lot to myself personally, as to do everything I can to create content that has a positive impact in your life by encouraging you and myself to lead lives of meaning and purpose, all while maintaining balance and moderation. And if you do subscribe to the channel, please tap the notification bell. That will notify you every time I post a video, which I do on a weekly basis. Once again, I'd like to thank you for watching the video today. I look forward to talking to you next time. Have a great day.